Imagine you're starting over with just $1,000 in your pocket. It's tempting to jump into the latest hot stocks or try to double your money overnight, but that's not the smartest move. Instead, the real secret is to focus on building strong financial habits and a simple long-term plan. In this video, I'll walk you through exactly how I'd invest my first $1,000 if I were a beginner, step by step. Let's start by laying a solid foundation for your financial future. Before you even think about investing, it's crucial to have an emergency fund. Life is unpredictable, unexpected expenses like car repairs or medical bills can pop up at any time. Having some cash set aside means you won't be forced to sell investments at a bad time or go into debt. For most people, starting with $500 to $1,000 in a safe, easily accessible account is a smart move. This safety net gives you peace of mind and lets you invest with confidence. Next, take a look at any high-interest debt you might have, like credit cards or payday loans. These debts can quickly eat away at your finances, often costing more than you could earn from investing. By paying down high-interest debt first, you're actually making a risk-free return, sometimes even higher than the stock market. This step strengthens your financial position and sets you up for long-term success. Once your foundation is set, it's time to start investing. For beginners, diversification is key. Instead of picking individual stocks, consider broad market index funds or ETFs. These funds spread your money across many companies, reducing risk and giving you exposure to the overall market. Take some time to learn how these investment vehicles work. They're simple, low cost, and a great way to get started. Consistency beats timing when it comes to investing. Instead of trying to predict market highs and lows, focus on contributing regularly. Even small amounts add up over time. Setting up automatic deposits into your investment account can help you stay disciplined and take advantage of dollar-cost averaging. This habit is one of the most powerful ways to grow your wealth over the long run. Investing isn't just about putting money into the market, it's also about understanding what you're doing. Take time to learn about risk, fees, and your own financial goals. The more you know, the better decisions you'll make. Read books, watch videos, and ask questions. Investing is a lifelong journey, and staying curious will help you avoid mistakes and grow your confidence. It's easy to get caught up in the excitement of quick profits, but real wealth is built slowly. Avoid chasing hot stocks or risky investments that promise overnight riches. Instead, stick to your plan, focus on your habits, and remember that investing is a marathon, not a sprint. Patience and discipline will serve you far better than luck or speculation. Your first $1,000 isn't just about making money, it's about building habits that will last a lifetime. Saving, investing consistently, and learning as you go are skills that will pay off for decades. The earlier you start, the more time your money has to grow. Focus on the process and the results will follow. Wrap up, investing your first $1,000 is less about picking the perfect stock and more about setting yourself up for long-term success. Build a safety net, pay off debt, diversify, invest consistently, and keep learning. Remember, this is educational content and not personalized financial advice. The most important thing is to get started and stay committed to your journey.